Hello, welcome to the weekly technical analysis review for Monday, July the 15th. I'm Rafi Bayojan at XM.com, and for this week we're going to be looking at the dollar yen, the pound yen, and gold. Let's start first with the dollar yen pair. We can see in the daily view that momentum indicators are in a bearish territory. The stochastics are pointing downwards. RSI is flatlining below the 50 neutral level. There is immediate support coming from 107.80 level, so that's been consistently proven as a strong support area of the past month or so. If that support is broken, we could see prices then slipping towards that 6 month low 106.77 we saw back in June, and then crossing below that level would reinforce the bearish view in the medium term, and then we could see the next major support coming from 105.25, so that's another important proven support level. If though we do see an upside reversal, there's likely to be strong resistance at the 23.6% Fibonacci retracement of the downleg from 112.39 to 106.77, so that's around 108.10. Overcoming that hurdle would then take prices towards the 50-day moving average, followed by the 38.2% Fibonacci at 108.92. However, in order to change the bearish picture to more neutral one, we would need to see price action climbing at least towards the 61.8% Fibonacci at 110.25. Let's now turn to the pound yen pair, another pair that's looking rather bearish in the short term. The RSI is heading towards the oversold level. There is immediate support coming from the 135 handle. Prices in fact have been hovering between 135 and 136 over the past few sessions. Crossing below that important 135 level could then take prices towards the 2-year low of 132.49 we saw earlier in the year, so that's at 132.49, and then further down the next major support would likely come from the 123.6% Fibonacci extension of that up leg from January to April, so that's at 128.63. If though we do get an upside correction, there's likely to be strong resistance at 136, because that's the 78.6% Fibonacci, which is where the 20-day moving average is converging. So a successful break above that key resistance area could then see pound yen challenging the 50-day moving average that's just below the 138 level. Then we've got the 61.8% Fibonacci at 138.75. However, in order to change this bearish structure to a more neutral one, pound yen would need to climb at least towards the 38.2% Fibonacci at 142.60, which is also near the 200-day moving average, and then we might then be able to get a more neutral picture. Finally, looking at gold in the weekly chart, we can see it's looking very bullish for the precious metal. RSI is above the overbought level, though it is flatlining, so that's in line with the consolidation that we've seen since late June, and the fact that the RSI is in overbought territory suggests we're likely to see even more consolidation before we could get another upswing. So if prices continue to consolidate and even reverse lower, support should first come at the 161.8% Fibonacci extension of the downlink from 1,346 to 1,266, so that's around 1,396, and below that we've got the 1,377 level, that's the 138.2% Fibonacci. If we were to get a sharper correction and prices were to drift towards the 1,300 level, or more importantly towards the 20-day moving average, which is currently at 20 weekly moving average rather, at 1,325, that would risk shifting the current bullish picture in the medium to long term to more neutral one. On the other hand, if we were to get another rally and we see a break above the immediate resistance at 1,427, the next target for the bulls would likely come at 261.8% Fibonacci extension. That's at 1,476. So that's it for me. Thank you very much for watching and have a great day.